To help you with the concept of understanding the process of balancing accounts and what balance carried forward and brought forward means, let's work through an example. So imagine a business which makes a cash sale of $1,000 and it spends $250 on supplies. If the question is to determine what the balance in his cash account is going to be, we can readily determine this. We know that the cash balance will equate the money coming into the business, that's $1,000, less the money that is leaving the business, $250. Therefore, we can conclude quite easily that the balance on the account is going to be $750. However, in the world of accounting, when we think about using T accounts and summarizing T accounts, all we're trying to do is work out the balance in that account at the end of a particular period. Admittedly, there's likely to be more than one or two transactions, but for simplicity, let's just work with this example, and the same principles would apply even if the T account had more transactions. So we're going to label this up as the cash account. We have the debits on the left and the credits on the right. Money coming into the business, the cash sale, as a transaction in double entry will be to debit cash and we would credit sales. So notice that the debit entry is to cash. So on the debit side, we are going to post our sale. We're going to describe this in the narrative as a sale for $1,000. Next, we have the payment for supplies. If we think about double entries, when you make payments for supplies, you're debiting an expense and you're crediting cash, the reduction of cash. Again, notice that the cash entry is a credit. We have a credit on the right-hand side of our T account, and we're going to describe this as an expense. And we're going to get down that $250. Now, if that's all that's happening in our account, let's now balance this ledger. So how do we do this? Well, step one is to look at both sides of the T account and determine what is the highest. Well, we can see that the debits are clearly higher than the credits. So what we're going to do in step two is make that the total on both sides of the T account. In step three, we notice that actually the credit side of this T account doesn't equal the $1,000. So what we need to do is enter a balance carried forward or carried down. So it can be abbreviated as CF, carried forward, or CD, which is carried down. Now, all that means is that that is the balance that is going to be carried forward into the next year. So here we can clearly see that that imbalance is 750, which we determined above anyway. Now, because the concept of double entry still holds, you can't just put a balance on the credit side without putting something on the debit. So the way the balancing process always works is that whenever you have your balance carried forward, the opposite side of that ledger, which here happens to be the debit, is where the balance brought forward or brought down will exist. Now, this will always be placed after the total of that ledger. So we're going to call this the balance brought down or brought forward. Doesn't matter what you call this. This will always be the same number that you've included for your carried forward, which in our example is 750. Now, all that means is that when we start the next period or the next year, we are going to be starting with this balance brought forward on the debit side. It tells us that money exists in this account. So hopefully this example gives you some clarity about what the carried forward and the brought forward, or the carried down and the brought down, are seeking to do. They are simply balances that allow us to carry forward that amount into the new period or the new financial year.